Welcome to TechTrends. TechTrends is a podcast series that provides perspective on the latest trends in technology, fintech, and digital. Today's episode is titled Paying It Forward, and will provide insight on the major trends dominating the payments landscape and where we're headed, both in the U.S. and around the globe. I'm Anish Bhimani, Chief Information Officer for Commercial Banking, and joining me today are Jennifer Barker, Head of Wholesale Payments Product Delivery, and Matt Luce, Senior Product Manager for Global Wholesale Payments. Jennifer, great to have you back. And Matt, welcome to TechTrends.
Hi, Anish. Thanks for having me.
Hi, Anish. Thanks for having me back.
So, Jennifer, when you were last on TechTrends, we talked a lot about real-time payments. And one of the points that you made was that 2019 was going to be the year that real-time payments became, as you will, real. So a year later, how's it going?
It's going well.
Yep.
It is real. It's here. It's being used. We're seeing really good volume running through the system. But what we're seeing is some pretty clear and distinct use cases for real-time payments. So traditionally in payments, we've thought about, is it a wholesale payment or is it a consumer payment? Real-time payment is really turning that on its head to say, who's actually receiving the payment? Is it a person or is it a company? And depending on that, we're seeing some pretty clear use cases emerge. So if you're a company, you want to use real-time payments to improve your employee experience.
Okay.
So payroll is a really good use case for that. So a really big competitive advantage sometimes for companies is how often they pay their employees. So rather than a traditional every other week, could be every day, even every hour, which could be in the competitive labor market a really good differentiator. The second is the consumer experience and really bringing a much richer, delightful, what we would call consumer experience. So if you lose your luggage or if you get in a car accident where you need money immediately to fix your car, real-time payments are a really great way to embed the payment as part of an overall really positive experience.
Okay, great. What other trends do you see in the payment landscape this year?
A couple of key trends are emerging in the payment landscape. First is the trend of real-time payments, which we just talked about. Certainly in the U.S., it's a relatively new system, but around the globe, there's dozens of live real-time payment systems with more coming online. Also coming online with real-time payments are the use of e-wallets and digital wallets and the alternate settlement methods outside of the traditional banking system. So I would say that's one, are the new payment types emerging. The second is all of the rich data associated with payments and how do you extract that to make payments safer, more efficient, or more cost-effective.
Matt, what about globally? What about like cashless payment trends? How do you see that going globally?
There's so much change going on in the global landscape. And in all honesty, right, the U.S. is a little bit behind some of that change, right? If you talk about real-time payments, as Jennifer mentioned, right, we're live now with the clearinghouse. The Fed just recently announced that they're going to go live in a few years with their own version of a real-time payment system. But most markets already have one or are in process of already building one. To me, it's the speed, right? Real-time payments is all about instant settlement, 24/7. And that payments is now kind of mimicking what you see everywhere else, right? We're a global economy that moves at a very fast pace. And so we're seeing a lot of change. You're seeing a lot of new pay types as well. In the traditional space, you've always had your wires, your ACH, and now real-time payments. Now you see wallets. It's not really a pay type. It just gives you the ability to do things within a closed loop system, but gives you that instant gratification, gives you that speed, sometimes gives you more feeling of security as well because you trust the ecosystem you're in. So change to me is the big theme. We're seeing a lot of opportunity to do things in different ways, connect to clients in different ways, pay and receive from clients in different ways.
So you talked about e-wallets, right? We hear a lot about e-wallets. There's no shortage of different wallets out there, right? There's a lot of them out there. How should business leaders be thinking about that ecosystem and getting involved and getting started with e-wallets?
Yeah, and if you think about the advent of e-wallets, right, it started in the traditional sense just as a pay type option so that consumers could pay each other maybe more easily. Now you flip to a country like China, which 5 years ago was predominantly a cash society, and now they've moved predominantly to a wallet society, where within the ecosystem you can make transactions, make payments with a QR code. You can show up at the store and buy things right off your device. We're starting to see the propagation of new technology allowing transaction interaction from big to small to happen in different ways. And that's really now opening up the opportunity for all marketplaces and all ecosystems to think about that client experience and having the payment be part of that client experience, or in reality, not be part of that client experience because it's seamless and it's outside. Right, and that's what the wallet can give.
Transparent to the user. Yep.
It's completely transparent to the user, right? They don't even most of the time realize a transaction has happened, and therefore, right, it feels like a very good experience from a client perspective.
One of the challenges that you think about this is if everybody wants to make it part of their own individual experience, do you end up with a dozen different wallets that you have to be compatible with? On the consumer side, we see that already, right? That side. How do you see that playing out? It feels like it's sort of bound for some sort of, shakeout or rationalization, isn't it?
I think it all pivots back to real-time payments, and now the fact that banks have the ability through new technology and new clearing mechanisms to do the real-time settlement. And it's real-time settlement. It's not within a closed ecosystem. This is real cash movement in 15 seconds in real time. And now that makes your ultimate wallet, your original wallet, your bank account, act more like a wallet that can go cross platforms, intersect across multiple applications. In the US, we've had that with card, because card has been connected, and you've got the likes of Apple Pay and Samsung Pay connecting to card. But now with real-time payments, it will open up that opportunity even more, and for banks to be part of that opportunity, and your bank account in a secure way to be part of that opportunity.
Jennifer, one of the other things we hear a lot about is the concept of virtual accounts. So what is virtual account management, and why is it such a big deal?
Virtual account management is actually a really big deal in the industry. Traditionally, corporates have had to set up their account structure that matches their GL structure. It may not necessarily match their business structure or even their business strategy. And so if you are opening a new entity, or if you want to segregate funds, or if you want to see only receipts for this entity and payments for that entity or certain currencies, the traditional answer has been in the banking industry, open another account.
Right.
So you could have hundreds or thousands of accounts depending on your business structure and how your GL is structured. So the interesting thing with the virtual account management system is that it actually allows you to have less physical accounts, but the virtualness, if you will, in virtual account management is the information that sits on top of it. That can be sliced and diced in a number of different ways, by geography, by currency, by entity, and so on and so on and so on. And the really interesting thing about the virtual account management solutions is that it's real time. So historically, you would open a new account, you would fund the account, you would get the reporting on the account, and that could take, days. But with virtual account management, this is instantaneous. So going back to the earlier point of data, and data being an important part of the trends in the payment landscape, that's really the power that the virtual account management system is going to bring.
So just to play back, it basically gives you a lot more flexibility to run your business in a way that makes sense, and not a way you're sort of being forced to do because of the way you have to structure your accounts, right?
That's correct. It gives you speed, flexibility, and we're going to talk about the role of the treasurer and the CFO becoming much more strategic, so you can immediately support business strategy and answer business questions through the concept of a virtual account management.
Yeah, I think it also fills a gap that exists right now, because you have a corporate treasurer who has their own back-end system with their own general ledger and account structure. And to Jennifer's point, today it's very difficult to mimic that in a bank account structure. So there's gaps there. And they fill those gaps usually with manual work or through multiple reports and different steps and processes. The beauty of virtual account is we fill that gap in. We give them the ability now, if you have a GL, well, why wouldn't you have a virtual account that mimics that GL and now allows you to auto-reconcile something that's very manual today? And then take it to the next level. Why don't we go further and deeper and give you insights into, we can tag a virtual account with a division, with an entity, with a country, with a location, and with all those tags, that just offers opportunity for more detailed reporting. And that data is really critical for them. It's real time. It's on the fly, right? They can look at it. They don't have to wait 2 days, right? The corporate treasurer of the future is going to take all those daily activities that's usually maybe 2 days behind global cash position, and then they're making decisions on old data and allowing them to make better decisions on real data, quicker decisions, so they can focus on strategy, which I'm full agreement with.
Yeah, and I think Matt brings up a really interesting virtual account management use case, which is, what is it going to actually allow corporates to do? Better manage their cash, save money, get more efficient, and get information much more quickly. Who paid them how much and where and in what currency. So there's a lot of promise and hope around the virtual account management solution.
So you both touched on something interesting, which is when I think about the benefits of virtual account management, I think about, as you say, more efficient, easier, better way to manage your cash, et cetera. But you also both talk about getting data out of that account structure to say, how are certain businesses performing? How is one store doing versus another? That, and actually making business decisions based on information now that you have that you didn't have before when it was all lumped in one big account, right?
Correct. And if you think about that, using kind of the retail store as a great example of what a virtual account could do for them, it could get it down to that level where you would know what register performs better, right? And then maybe get analytics behind why certain registers, right? Or even employee analytics around, right, different things. And it's really going to allow you to understand your business better and make better decisions and strategic decisions around your business because the data is at your fingertips.
Jennifer, a lot of discussion about putting the customer at the center of how you think about new products and innovation. Virtual account management is a great example of that. How do you think about that when you're developing or thinking about new payment solutions, both in the consumer space and the wholesale space?
I think a lot of this comes down to really segmenting your clients and understanding what it is that they're trying to accomplish. So if you think of a smaller company that may not have a robust technology infrastructure, or it may only be U.S. domestic today, but has aspirations to grow internationally, that set of payment needs is going to be much different. So they're most likely looking for complete ecosystems. They want the payments and the receipts and the reconciliation and reporting and technology all packaged up into an end-to-end solution that easily plugs into the ecosystem and then will scale as they grow. Whereas you have larger, more globally complex companies, that's all about efficiency and really removing friction from the process, because ultimately what treasurers are trying to do is execute a process end-to-end straight through processing. The payment shouldn't be a separate piece of the transaction. And so that segment of clients needs much different solutions and needs richer data analytics, particularly around liquidity management if they're a global company.
Matt, how can companies think about future-proofing their payments infrastructure? What technologies are important for them to consider?
Yeah, I think the technologies you've talked about in the previous episodes, you've got APIs, which Jennifer's touched upon a couple of times. You've got cloud. You've got, obviously, blockchain and distributed ledger. We see all of those types of technologies playing a very important role in the payment ecosystem because they bring different attributes and when combined together can really transform how we're going to do things as a bank, but how our clients will interact with us as a financial institution as well. It's really harnessing them in the right way and combining those technologies in the right way to offer a transformative experience. Distributed ledgers, there's some obvious use cases, right? And it's always been forced down the payment path because you have this ability in a very secure way to remove middleman and remove friction from the process. And we see value in that for sure. But actually, when you combine that with an API and then maybe store some of your data in a cloud, you now enhance the efficiency your back-end system can do. You can provide things in that scale and back to speed and real time that's necessary. And then as we look at the real core infrastructure, payments is really starting to think about the idea of microservices, right? And building things that you can reuse for multiple use cases or multiple business purposes. So not just build something once and then only be able to use it for that one purpose, but build it and be able to start and reuse it for something new. We're going to see that in the virtual account management space, where we've built now a very powerful account structure that can be sliced and diced and have multiple levels. But what if we could do that at scale and do that in different ways, right? There's going to be other use cases for that we're very excited about.
So that sounds like a lot about efficiency, about scale, about improving some of the experience. One of the things we haven't talked too much about is that customer experience and removing friction from the process. If you think about on the consumer side, payments are pretty seamless. Don't even notice that you're making a payment because it's embedded in the individual app, right? Think of a ride-sharing app. You're done, you make a payment, or you're splitting a bill. How far off are we from that kind of experience? And Jennifer, maybe I'll turn to you with this on the wholesale side.
We're not too far off, actually, on the wholesale side. So let's use your example of a ride-sharing app. You have preset your preferences, whether it's your digital wallet or your credit card, whatever it is, how you want to settle your transaction. You don't even think about that when you get out of the car because it's embedded in the rules of the app. And so the wholesale landscape is not too far off from that. So I would see two major trends. First is efficiency, and the second is optimization. So today, clients put their business rules inside their enterprise resource planning system or their general ledger system. The different payment files are generated and sent to banks and they're processed. Instead, corporates should be able to give their business rules to their financial institution, and the financial institution, through optimization, we talked about machine learning and artificial intelligence, figures out the best way to execute that transaction based on the corporate's business needs and business rules. So that's the first thing. And the second thing is around optimization of how an item is cleared. If you're a beneficiary, you may have a very strong preference on how you want to receive a payment. And so if you link the efficiency that we talked about in terms of the payment flows with optimizing how beneficiaries want to be paid, that's a lot of what you're seeing on the consumer side. And we do have many use cases today on that, but those are the trends you're going to see a lot more of in the wholesale space.
Jennifer, you really hit an important fact there, which is traditionally corporate treasurers have been forced to determine upfront the pay type. And therefore, if there is a new pay type, a new currency, they're forced to make changes in their back-end system to take advantage of that new pay type or new currency. And that's costly. And so for them to do that, they have to have a use case that's very compelling as to why they would do that. And the future we see is, well, why are we forcing that? The consumer never knows. Interview 100 people on the street. Mm-hmm. Only us would know the difference between an ACH, a wire, and now real-time payment.
Right.
The average person, they have no idea, right? If you talk to your family members, right, you maybe explain to them, you probably get paid via ACH, via payroll, and then when you bought your house, you used a wire, but they don't understand. The corporate treasurers had to. They've had to almost be payment experts, and that's very difficult now. It's so difficult to be a payment expert because things are changing so quickly. There's so many new opportunities to take advantage of, and then you throw in the gig economy and e-commerce and all of that connecting more parties. Payments are going to be critical, and staying on top of how you make and receive payments is going to be critical to remain efficient.
One of the interesting things that I've noticed is the amount of investment in new fintech companies in the payment space. So there seems to be a rush of new people trying to enter this space. What is it they're trying to solve?
In my opinion, it goes back to the data, right? If you think about the data, if you could harness the data of transactions, if I knew everything you bought, right, it would be extremely, extremely powerful if then my ultimate goal was to market to you on the internet. Mm-hmm. Because now I would know, oh, you just bought a golf club. Well, maybe now I'll market to you golf balls or a golf shirt. They've all seen the power that the data brings from payments and transactions, and they want to harness that. Most companies don't want to get involved in the actual transaction because of the security and the overhead and the cost and the complexity. But they realize there's a huge opportunity to get that data. And the only way you get that data is you have to be involved in it in some way.
And I think one other interesting point about payments is everybody uses payments. If you want data across a general population, everybody makes a payment, whether it's receiving your payroll, you're paying your mortgage, you're paying your rent, you're paying your car payment. There are many, many, many use cases and volumes going through the system. So it's a common set of data that is applicable to a much broader use case set.
Matt, I want to go back to something you said before, which is when you think about that model, if the goal is really to be able to, micro-target customers or things like that, that's great from the provider point of view, but from the consumer point of view or the client point of view, it's a little creepy. So what's in it for the consumer? It's got to be some sort of a better experience for them, right?
Yeah, I mean, if you think about the consumer experience, right, it's making it more frictionless, right? So giving that experience that I don't even realize I'm making a payment or transaction. I'm not even having to take my wallet out of my pocket. We've gone past, it's too hard to just tap your credit card. That's too much, right? We have to make it completely seamless. There's that opportunity to really just continue to make that. But I think as well, consumers, they'll start seeing discounts, right? You can, if you think about going back to kind of the original kind of e-wallet, it's airline miles. That's like the birthplace of the e-wallet in very many ways. And why do they do it? For customer loyalty. Right, I know I'm hooked in many ways,
sure.
Right? And they get you because you feel like, no, I want to stay in the ecosystem because I get this value. That's where the consumer is going to start seeing a lot more of that. And brand loyalty and customer loyalty, that's so difficult these days. And so they're going to start seeing this as, if I can add on the payment experience as well and maybe show it a discount or give an opportunity, it really brings out now a whole new opportunity for how you market and really talk to your consumers.
Yeah, Matt, I think that's a really interesting point. I think another interesting element for the consumer, in addition to more targeted information, is security. So things like machine learning and artificial intelligence, machines are getting smarter and understanding, this transaction looks unique or different from what is traditionally done. So I think that the security and the data around that is also a really important part of all of the revolution in the payment industry.
You mentioned security, Jennifer, right? So usually people don't think of frictionless and security in the same conversation, right? Security has always been a core part of the wholesale payments process as well. What's going on in the security space, Matt, when we start with you on wholesale payments?
Yeah, I think it starts right there, right? For us, security and stability, it's bread and butter. Right? We have to have it in the wholesale payment space. You have to make sure that payments are as secure as they can possibly be. And that's been a challenge in this environment because the fraud in the environment has increased massively. As things electronify, it gives opportunity, right, for new parties to come in. Bank robbery is not going to be a holdup at the branch down the block. Right? It's going to be from somebody thousands of miles away on a computer infiltrating either one of our clients or our systems, right, and electronically moving funds and then getting those funds out of the account.
Sure.
And so for us, it's critical to leverage the new technology up front to validate the customer, whoever that may be, including corporate customers, in different ways using GPS and face recognition. And then for us in the payment space, especially in the wholesale, for those very large transactions, it's really leveraging AI and the back-end processing to use previous history of data to understand whether this transaction seems to fit into the pattern. And for us, that's critical, right? If it's the first time they've sent to this beneficiary or the first time we've seen any of our clients send to a beneficiary, right? Sometimes that's a big flag for us, right? That there may be an issue here. And that's where I think we're using some of the new technology as well. Our interbank information network that we're building off of blockchain and bringing other banks together to share in data and information in a very secure way. Well, one of the new products we're looking to launch is this ability to validate an account at the beneficiary's end. Obviously, just the use case of straight through processing, somebody fat fingered an account, it's good to know up front whether before you allow it to process. But secondarily, if you added on just a handful of additional data to that information, how long the account's been open, and you tack that on with the data we have from the history, and now you have a much more comprehensive view of that transaction and can make a better decision of whether you should process that transaction.
And Anish, I think you bring up an interesting point here, because to enable everything that Matt is talking about, you need large-scale computing.
Right.
And so things like machine learning are a really important part of the evolution of the payment landscape. And in order to facilitate this, in our expectations, as you said, of real-time and immediate settlement, you have to have the technology that can process at that scale quickly and safely.
Right. Yeah, and it's an interesting point. So just to summarize, what you're both talking about is sort of two areas of security around payments, right? Number one is the upfront authentication and onboarding, right? And then on the back end, it's about using things like machine learning and other new technologies to better identify potentially fraudulent transactions. And, we've used this technology in fraud for decades, right? But I think the difference now is rather than saying, yeah, this is definitively bad, it's basically being a little bit more predictive about what might potentially be a fraudulent transaction, maybe kicking it out, outsorting it, and have give somebody a call to say, hey, is that really what you want to do? You've never sent something to this country before. Is that a legitimate transaction? And then learning from that and feeding that back into the model so it gets smarter next time.
Yeah, and look, we many, many years ago made that decision when fraud became more prevalent in the electronic space to stop more transactions. Right? We knew it would cause some client pain in the beginning, but in the long run, it's a better experience because we've helped clients stop transactions that are fraudulent, right? And that's critical, right? Stopping one transaction that can be of a very large size, right, can save a client a lot of money up front. We, want to continue to enhance that, leveraging some of these new technologies. And then from my perspective as well, as an industry, we just need to come together more and share information in the fraud space, right? And I think that blockchain and distributed ledger is another opportunity to do that in a very secure way. I don't have to have direct access to all of your accounts and all of your information, but let's figure out a way to interact so we can share and know, right, the knowledge that we have on a bad actor in the system.
Right. So we talked about artificial intelligence and machine learning and fraud, right? Machine learning is a very hot topic these days, right? So it's all anybody wants to talk about. What are some of the other machine learning use cases around payments?
A couple other interesting use cases for machine learning is around smart routing.
Mm-hmm.
And then not only smart routing, but then giving clients better choices. So this is best illustrated through an example. If a client sends payment A, B, and C file, right, and they want instructions routed to certain jurisdictions and certain beneficiaries, we understand their business rules. We may, through machine learning and artificial intelligence, say we can accomplish all of those same things that you want, but actually, if you did X, Y, and Z instead, it's going to be less expensive, it's going to get there faster, or whatever the business goals are. So that's really the major use case, I think, is around the optimization and then helping clients improve their payment flows.
To me, I always like to take a step back and talk about how we've been using machine learning for decades in the global payment landscape, for repairs, for straight-through processing. If it was a simple, same repetitive mistake a client would make, we have used machine learning to repair that automatically. Now we can just enhance that at a level that is just unbelievable. Why couldn't we just take a client's transaction or a client's file and say, hey, we've noticed you're trying to pay Jennifer 20 times in this file. Why don't we just combine them into one, send Jennifer an email of the details of the 20, but now you go from 20 transactions down to one. I think there's just a lot of optimization you can do, right? Harnessing, right, the new power that at a higher speed and higher velocity, the data can be used in.
What does all this mean for the role of the finance professional, the treasurer, of the CFO? How does that role change kind of in light of all this and going forward?
I think the role of the treasurer, the CFO, and the broader finance and treasury team is really moving to much more strategic. So the strategic treasurer of the future, it's going to be less about process and getting payments out the door. It's going to be more about intelligent information and helping optimize the company's global or domestic liquidity structures. There are things that companies want to do to achieve their business goals, and they need access to cash to do that. And those are executed through payments. So the role of the treasurer is becoming much more strategic in terms of data analytics, cost savings, and really overall optimization for the company and management of cash.
Yeah, I think that strategic, moving the treasurer, it's not a back office, kind of forgotten about area that just processes transactions and makes sure you have cash in the right account to make payments.
Right.
It's really become, to Jennifer, it's very strategic. You have to be in touch with your business because depending on where they're going, what market they're going in, they may receive funds in different ways, need to pay funds in different ways, and it's critical the treasurer is part of that discussion and that dialogue. And if you think about how they spend a lot of their time today, if we can leverage the technology, like Jennifer mentioned, and really automate or give them more real-time processing so that they can make better real-time decisions, I think it's going to be valuable. We joke, right? We think we've been looking at technology. We haven't talked about it here yet, the voice technology that now has kind of permeated our personal lives, where we can just talk into our phone or talk into a device at home and get information. We think that is possibly the future of a treasurer as well.
Finally, question to both of you. If you had one piece of advice for our listeners today, whether they be in a treasurer role, CFO role, whatever, on how to take advantage of all this change and excitement going on in the industry, what would it be?
Yeah, I'm happy to start. I would say don't go it alone. There's a lot of resources out there to help companies, whether it's their financial banking partner, their financial institution, whether it's industry events, whether it's their peers who are adopting these different technologies. There's a lot of different ways to learn. And not everybody is there in terms of adopting every single payment method. And that's not really probably appropriate for most companies anyway. So I would encourage companies to think through what are your business goals and what are you really trying to accomplish? Is it new market entry? Is it cost savings? Is it liquidity optimization? Is it improving your CSAT? And depending on what it is you're trying to do, there are different payment methods and tools to help you facilitate that.
Be prepared for the future. The future is changing very quickly. Don't always focus so much on the now and then. You've got to take some time and think about where are you going to be in 2 years? Where are you going to need to be in 5 years? Where is your business going, as I mentioned earlier? Get connected to the front office and the business and think about things are going to change, which in my perspective, if you stay the course, you will get less efficient if you don't start preparing for that change now. and we've gotten very efficient in payment processing, and Treasury has gotten very efficient, you can't go the other direction. You've got to continue getting more efficient, but in order to do that, you need to be prepared because things are going to change, and just maintaining the course is not going to probably be good enough in the future.
Another element I would add is the banking infrastructure or is the payment infrastructure in the company, is it ready for the next generation to adopt payments, whether it's domestic or globally?
Well, Jennifer, Matt, thanks very much for joining us today.
Thank you for having me.
Thanks, Anish, for having me.
And thanks to all of our listeners for joining us today. Tune in next time.